Markets seem to be slowing down at the index level based on some exhaustion gaps over in the semiconductors ahead of the PCE inflation data tomorrow morning. And that may seem concerning, but that's about the only place it's slow out there. Meta announced a paid tier for users, and it sent the stock higher intraday over 4%. Nebius has been given the golden blessing by Leopold's situational awareness, and Snowflake earnings are making the IGV completely forget about the Zscaler disaster from last night. The list could go on, and therefore am I really concerned about the S&P 500 going sideways at all-time highs? No, not really. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 7 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale, and the first thing we should try to figure out is what's going on here from a trend perspective. I think we can all agree that we set a brand new all-time high on the Tuesday session via that gap up, so therefore it's the highest high in the trend count. And always when you're sitting on the highest high, we know that there's room to pull back and set a daily higher low to continue the trend in the upward direction. Now, is a pullback the base case? Probably not. Why would I say that? Well, if you take a look at today's daily bar, you've got yourself a lower wick there. It's a hammer candle, right? So we test the Tuesday low, sellers are unable to break down through that low intraday, and we close strong in the upper third of today's daily range. So a more reasonable base case, outside of any crazy news tomorrow morning at 8:30, we've got PCE, GDP, jobless claims, and durable goods, all 8:30 tomorrow morning. Come out to the show. Pre-market prep always kicks off at 8 a.m., right? We'll cover it in real time. But for now, the base case is probably either consolidation and Brigade bolt into blue sky territory, or just straight up continuation to start the day. Why is that the base case? Because we've left an unrepaired overnight all-time high at 754. Remember, markets typically don't set all-time highs in the after hours and leave them untested. So that 754, in my view, needs some repair. We have no evidence of stronger sellers stepping up towards the lows of today's session. We've closed strong. We've got decent positive news overnight so far based on NBIS gapping higher. We've got Snowflake pushing higher. If the market does pull back, let's say that we do stay in consolidation, Brigade bolt underneath the 2-day low, underneath the 748.75, that's fine. We just covered that because we're coming from the highest high, it's very possible that a daily higher low continues the trend in the upward direction. The main spot I would be looking at is 743.50. By the end of the week, the 20 SMA may start to play catch up towards this area here at 738.15, but on the hourly chart, as we'll see in just a moment, this would be the much more compelling higher low because of some hourly confluence. So without sort of further ado, let's just jump to the hourly chart. I'll show you exactly what I'm talking about. It would be ideal if the pullback happens, right? Something that looks like this flips the hourly trend to down, and here's where we find buyers. Why is that the case? Let's come in here with a Fibonacci from the low of this move up to the new all-time high right in here. Notice that the Fib 38.2 is perfectly in that neighborhood. Once again, 743.50. If we take that off and go ahead and throw on our intraday anchored VWAPs, you'll also see, as we throw these on here, that by the end of the week, these will be confluent in the same neighborhood as well. 743.50 is the golden spot for a beautiful higher low on the daily timescale. Now, is there some concern that if the market pulls back like this ends up becoming a failed breakout, look above and fail? Well, maybe, but the main concern would show up if we do something that looks like this, and then we Brigade bolt underneath that level. That's where you could say, specifically, I'll point to where with the red crayon, I'll draw a nice red dot. Right here is where the look above and fail becomes real, and of course, the target on a look above and fail is always the bottom end of the balance range. In this case, that would be 732.25. Again, is this a base case? Is this primarily what I'm focused on and looking for into the end of the week? Probably not. I would be much more interested in consolidation, continuation, or if we do pull back, let's say we get that hourly downtrend, fine. Daily higher low, hourly trend makes it back to here. Consolidation, and then continuation again into blue sky territories. That is much more of the base case. It has paid to be an optimist in this market. And until proven otherwise, those are the steps. That's the mindset. That's the framework that I want to use until it actually breaks and there's a gnarly reversal of trend on the daily timescale. So for now, that's what I'm mostly focused on coming into tomorrow. Let's jump into the market internals. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner on what this all means. But generally, what's been going on this week? we're still getting volume inflows as the market balances sideways here. We're still getting a positive advanced decline line. The cumulative tick has not been all that compelling, but this is not enough bearish evidence to say, oh my goodness, let's short the market into the ground, it's going to crash and burn, and this is all for nothing. Not at all. I would say that the underlying components of the market, they look fine here, right? There's a reason why in the intro I talked about Meta being bullish. I talked about NBIS being bullish. We have Snowflake gapping up on earnings. All of these things, and again, there's much more. A lot of the neo clouds, they all look good. Your HUT, your APLD, your Cypher, all of them look good, right? So I don't want to get overly bearish because semiconductors are taking a break. I want to either look for sideways consolidation, gentle higher lows, or let's just say semiconductors recatch a bid tomorrow. Guess what? We're probably higher again. Let's take a look over at the market profile. If you're not familiar with the market profile, check out the video tutorial in the top right-hand corner. What do we see here? Was value lower on today's session or higher? I'd say it's higher in the individual profile, and it's technically overlapping to up with the previous day's range, right? Or I should even just say the previous day's value area. It's not like we overlap to down on the value area low. So is that bullish or bearish? I would argue bullish. Most of the acceptance, most of the price dynamics in the auction happened in the upper third of today's range. Again, like all it will take is a break of the 2-day balance range. We should target the overnight high, which is up here. It's the same thing as the Monday abbreviated session high on the futures. It's close to 75.70. That looks pretty darn good in terms of an upside reaction here, or available move, so to speak, for our futures and just generally the S&P 500. Let's jump back on over to the platform. Let's take a look over at the QQQ NASDAQ. I'll start by resetting this to our dailies. Here's the Qs. The Qs look, I honestly about at the same, if not slightly better, because we have a slightly higher high in here. Now, yes, the market was unable to continue in the upward direction, but once again, overnight all-time high left unrepaired from the after-hours session, 737.59. You'll also notice that we're just at the upper edge of the weekly expected move. So is it reasonable that the options market and some dynamic hedging starts kicking in here and generally we don't go much further? Fine, reasonable. I mean, this market's been on an absolute tear. If we just go sideways in here, again, base case is some kind of continuation that looks like that. If we do pull back a little bit more firmly, a full gap close would certainly be on the table over the high from Thursday of 2 weeks ago, Friday of last week. That's 722. Gap fill reversal is just a very, very shallow undercut of the 2-day low. If we bounce off of that back to the range high and Brigade bolt out the new highs, bullish there. If we do take out the 2-day low and the gap, if we're underneath 722, daily higher low here, 714.65, that looks pretty darn good, retargeting the all-time high, right? So again, base case coming from the highest high in the trend count is that there's room to pull back, set a higher low. We still have not tested the daily 20 moving average this entire rally higher, right? Here's that April 8th gap up, sets the entire lockout rally in motion. We've still not tested the daily 20 at the index level. So as and if we continue in the upward direction here, again, shallow pullbacks look A-OK, reclaims and goes. Consolidation, base case, I think I've said it until I'm blue in the face. It's a lot of the same stuff here. Higher lows over these key levels, 714.65. Let's go to the hourly chart, just to illustrate that concerning failed breakout look. If the market comes in underneath 722, tests this low, and on the bounce, let's say we get hung up here, and oh my goodness, it gets concerning, just like the S&P 500. It's no different, right? Your bearish action really starts when and if we get this. That right there is the bearish move when this turns into a lower high. But as of right now, the base case is seeking higher lows, which ultimately go on to set higher highs, right? If you just look at this pullback here, we got the firm higher low. We went on to do what? We set a higher high in the trend count. No problem there. So this is not a base case. It's a threat. We'll be aware of it. But the base case, I know I've said it so many times now, you might be like sick of watching the videos, but there you go. Upside there. Gap fill reversal right around this neighborhood. Same thing. Let's say we do set the lower high underneath. Base case is for here, back to here, sideways for hourly bar or something like that, 2, 3, 4 hourly bars, and then higher, right? That is the base case out of this market. I will change my tone when and if this fails, comes back down here. Yeah, I'll change my tone here, but I've got to see it to believe it. If we slap on the Fibonacci's, we'll likely see a lot of the same here. Coming from the low, let's get a click. Thank you, Thinkorswim. 50% retracement is going to be the key inflection point there. 38.2 is honestly, if you get overshoot and a little bit of slop on the gap close in there, but you're over 718.60s, just understand it's total bull flag consolidation from an hourly perspective, right? This classifies your bull flag range, so to speak, looking for continuation out of it. If we throw on the intraday anchored VWAPs, let's grab that study set here. Notice that the spread is mostly stuck there at 714.65. So that is your Huckleberry as a daily higher low if markets pull back. But once again, some of the base case here headed into tomorrow is just consolidation and or continuation into new highs. Just like the S&P, if you tag that overnight high, come back in, do this, fine. I can agree with you that this is a short-term hourly head and shoulders, but if the hourly trend breaks to down, I'm still, I know I've said it a gazillion times, looking for the daily high or low in this raging bull market. That's the QQQ on the hourly chart. Let's quickly hit the NASDAQ side of the market internals. What we can see here is a mirror image, even better, honestly, than the NYSE side. You can see stronger volume inflows on the Tuesday session, decent inflows today, decent AD line here, a little bit of a weaker close on the AD line for the NASDAQ today, and your cumulative build's a little bit weaker as well. Again, overly concerning, oh my goodness, run for the hills, duck and cover, it's going to go to zero. Not quite. The only thing that I would say is of slight concern here, not overly concerning, but slight concern if I just jump in to the futures for a second, is just the amount of give back here through the overnight. What looked to be a really strong gap was immediately given back headed into today's session. So for now, that really doesn't change the base case, but it is something that I would acknowledge as being a little bit more, that's odd. Why did that happen if buyers were going to remain strong up there towards those highs? Right. So we all really know at the end of the day, it's the end of the day, first of all. But on the ES or SPY and the NQ, QQQ, it's all about the 2-day balance range low. If you take it out, look for the daily high or low pullback, try to find buyers at this key inflection point, 714.65. Spiders, as we just talked about over here, 743.50. Let's, before I forget, jump on into the NASDAQ side of the market profile. Then we'll hit our Russell side of the market. You can see here that your value area is a little bit more middled in today's session. A period is single print, so you get a B-shaped profile. It's a little bit more indicative of liquidation break off the open, which I don't think is an unreasonable take here. A little bit of an emotional drawdown, and then we didn't really continue any further or even test the previous day's low. So hard to say that the bears are completely dominating or taking control of the market. I would say that we have consolidation, a little bit of slowdown at the highs, but the underlying components of the market still look really, really compelling. Let's jump back on over to the platform here. Let's give this a reset and let's take a look at our IWM. Daily timescale looks phenomenal. I would say what a strong rally off of the equal low. I was fairly concerned on Wednesday of last week, or I guess it was Tuesday, about this equal low here. And then the fact that the market said, hey, forget about it. Rates are coming down. We're straight back to new highs on the Russell. Really strong stuff. This, of course, in terms of daily trend count, is the highest high. Just like the other market indices at this point, we could either continue in the upward direction, we can go sideways here over the left side peak at the gap close. That's 286.75. Reverse off of that and continue like that, fine. Or if we Brigade bolt underneath, still looking at availability for a higher low. In this index, I would be mostly focused on this 280.25 because of what it represents from back over here, as well as in here from that gap down. As long as the daily higher low is above this level, hey, I'm not complaining on the Russell. Higher lows over 280.25 should seek continuation of the daily trend in the upward direction, noting that this is a multi-week balance range that is starting to break out. I'd like to see that bounce, at least back up to the highs. Base case would be going through and seeking continuation. If this rolls over here, remember, problems will emerge just like the S&P and the NASDAQ when and if the lower high shows up right here. The red dot is the concern. It's the threat. We've acknowledged the threat. Is it the base case? Probably not. Let's drop it on down to the hourly chart. Let's just take a look through our supporting little tools here using the fib from the low to the high. 38.2 right on a pretty critical spot as well. This is, why is my white crayon not loading? There we go. Right there at the 283.50s. If we could support above that, you've got fib 38.2. You've got your 20 SMA likely into the end of the week offering confluence at that level. Again, line in the sand 280.25. I'm not going to argue with 283.50 if that's what's going to step up. Let's go ahead and drop in our anchored VWAPs on this side. And what do we see over here? Decent confluence towards the end of the week around that 283.50. And then, of course, the major low. Let me just hover my cursor here for a second. Which VWAP is this one? That is here, headed higher. Which one is this? That one's a little bit more meaningful. That comes from this gap up way back here. That one will be confluence and support at the 280.25. I was just looking for that one in particular. That to me is confluence. Once again, decent reference point, noting that that represents the average participant from the gap up on the session here from April 17th. So IWM telling me that breadth still looks good under the hood. This is an expansion of breadth, which is bullish for the rally to in the S&P 500. Not necessarily pull back firmly, but if it does pull back, it should be a more mild pullback if breadth expansion is taking place rather than really sharp. If breadth was deteriorating, if the Russell, let's play devil's advocate, if the Russell said, ooh, I rejected in here and rolled over after this bounce off the lows, I would say, okay, a little bit of head and shoulders, breadth doesn't look good, the rally isn't really broadening out here. Yeah, if the S&P is going to pull back, you might run into some problems if you lose your leadership. But right now, with the market doing this in small caps, you've got the leadership spread out there enough so where pullbacks should be damp and mild in the S&P and the NASDAQ, more so the S&P with the overlap with the IWM. So that's the take here. Let's quickly take a look at the Rusty Russell market internals. Let's give this a set over here. What do we see in terms of the indications? Same old song and dance. I mean, a little bit more gnarly on the cumulative build, but even that gets us down to a negative 1600. That's not bad. Typically what we're looking for is a 2000 plus or minus to be a substantial read. I will give the bears a little bit of credit. I mean, a decent amount of time was spent under that zero mark, but just not enough magnitude to actually get us underneath the 2000 figure. Let's jump on over to the market profile for the Russell side. Give this a little reset here. We just see value creeping higher. If this is value from Friday, this, of course, is higher here. This is higher here. You, of course, have a little bit of an unfilled gap in this neighborhood as well. What does that tell us about what's going on in terms of participants? If we had stronger sellers, they should have closed the gap. We do not have stronger sellers. The gap did not close. Poor high has been repaired. Decent little excess high in B period. Sellers painted themselves into a corner into the low of today's session there from F period. Value is still migrating in the upward direction. There's nothing really wrong with this. And just like the other two indices, we do have an overnight all-time high that is in need of repair. Let's go back on over to the platform here. Let's just give this a reset to have the S&P 500 up in the background. There we go. And let's jump into our sector watch list over here. Who was leading, who was losing, and where was the weight? Discretionary leads the pack up 1.52% this week. Looks pretty darn good. XLY is a heavier weight risk on component. Mag 7 up 1.05%. XLB lightest weight sector, but not hurting. XLK SMH looks risk on towards the top end of the list. Even the XLC, the new second heaviest weight sector by market cap, is outperforming the S&P product itself. It's up 54 basis points there. Bottom of the barrel, XLE energy. We know that energy has been an absolute pain in the rear to trade. I've been an advocate for like, hey, just stay away. It doesn't matter how good the charts look. Just kind of stay away. One headline, you're done. So XLE is kind of getting its teeth kicked in. XLF, a little bit more concerned about this one. JP Morgan did not have a good session today. XLF is mostly tied for second with the XLC for second heaviest weight sector. It's technically the third that XLF nowadays, but nonetheless, that is a heavier weight component. Don't love to see that at the bottom of the barrel, but seeing the other spread here in some of these other risk on groups, not overly concerned. Utilities, lightweight defensive. IGV needs a little bit of love there, but it has put on a show over the last couple of weeks, not overly concerned. Healthcare defensive, real estate lightweight, staples defensive. What's the posture telling us here? It's still a risk on environment. Risk on environment here. Let's jump on into the actual structural charts. XLY looks fantastic, trying to break through these highs. Thanks Tesla, thanks SpaceX merger, thanks Amazon for acting well today. So if we could stay over 121.25, seeking continuation. If we pull back, room for higher lows on the daily, ideally no further than 118.50. Let's jump on into the Mag 7 ETF. Looks great, taking out the multi-day highs here. Again, thank you Amazon, thank you Google, acting well today. Meta trying to get up off the floor. Looks good over 69.80. Looking for the all-time high, equal high, if not continuation to blue skies. As long as this is surfing over the daily 20, no concerns. XLB, nice rebound off the lows, no lower high in here, was willing to sort of give the bears a chance, and they've sort of let that one go. So yes, it's the lightest weight sector, but upward pressure is upward pressure. XLK, how can you argue with this? Sitting sideways at all-time highs. Consolidation just like the Qs, continuation into blue sky territory. If we pull back, ideally, it's right here at 180s, 180.25. Previous resistance acts as newfound support, and we seek continuation from there. If this fails and we do something that looks like this, we'll talk about the head and shoulders when and if it's relevant, but for now, let's remain optimists. Let's primarily look for this and seek continuation in the upward direction. We'll change our tone when we have to, but that's not the base case yet. Let's go on over to the SMH. A little bit of an exhaustion gap up today. MU, SanDisk, some of those names getting a little tired. AMD, right? So if semiconductors need a breather, that's fine. We need the rotation to go to other places. That's kind of what we saw. The fact that the Mag 7 ETF here today on an individual daily performance is up 1% when the SMH is down 2.69%. Kind of tells us what we need to know. The money is rotating around the market, and that's a bullish thing that will keep, again, pullback shallow and damp, and more so offer up sideways correction through time rather than pullback via price. So rotation's good here. In terms of the SMH, though, yeah, I mean, it might look like a gnarly day down over 2.5%, but really, has this chart done anything wrong? No. I mean, volatility is rocking out there in this market as it relates to just the ranges that we're traveling in these names these days. But is this damaging the chart? No, absolutely not. It's literally a brand new all-time high, able to set a daily higher low almost in the same bar. Right. So I like the fact that this closed a majority of the gap. This is an awesome spot for a higher low. We were talking about this on the hourly chart in the group today, saying, hey, as nasty as it seems, if there's ever a spot for a higher low and tight risk reward to give it a go, it's kind of going to be right around this neighborhood, right? I was kind of thinking, all right, maybe a little bit more of that gap close 578, I didn't quite get there all the way, but nonetheless, the location is still right. Buyers are stepping up for that hourly higher low and potential continuation of the trend. The XLI looks fine, no problems over here. 8% of the S&P. If this breaks out of the 2-day range, bullish for markets. If we consolidate in here, not concerned. Let's go on over to the communications sector. I think this is still a threat. I still think that we need to keep a very close eye on 115, but for now, nice rally today. Thank you, Meta. Thanks for getting up off the floor. We'll take a look at that chart in just a second. But for now, this is a great look. As long as we can kind of dodge the descending triangle and instead think through the lens of a pennant or a bull flag here, great. This trendline break is key for keeping the market bullish out of the XLC. Energy, hard to really do anything with this. Just when you think it's a double bottom and we're breaking the neckline, you get smacked in the face. Thank you to your headline volatility. It's just an avoid. Avoid this. Strait of Hormuz, not worth it. You're not an expert unless you literally are, in which case you're studying this stuff. You're all wrapped up in the energy, supplies, crude oil inventories, the whole 9 yards. Great. If that's your trade, that's your trade. But for the average guy just trying to trade the market right now, I would say stay away from your energy names. Too volatile, too hard to figure out with the headlines. Let's jump on over to the XLF. Concerning. I don't like the fact that we're still stacking these lower highs. I don't like the fact that we closed underneath the 20. Is it hanging on by a thread? Yeah, I'll give it that. We're just kind of sideways here. If we do pull up out of it, that would be great. If we do start to break underneath and close this gap, a little bit more of a red flag in the background, but not enough to derail the market yet. XLU, I think you're trying to look for a higher low here over 44.75. That would be ideal. Remember, it might be the latest weight. It might be very defensive in terms of sector posture, but we don't want too much downward pressure. Let's jump on over to IGV. IGV, again, not necessarily a great performer on the week, but look at the trend here. Still looks absolutely phenomenal, and Snowflake in the after hours is pulling it up higher by almost about 75 cents there. So we'll see if we can get some sort of consolidation to ultimately close out this gap above and test the 200. That's the main target we talked about on Saturday. Let's jump on into the XLV. Not overly concerning. It's just stacking these incremental daily higher lows. Hate the daily bar from today's session, that big upper wick, but hey, the trend is still marching onward. If this is going to be this big old double bottom or something on a weekly perspective, over 150.25 is really the next pivot watch for XLV. Real estate, hard look up here with those inverted hammers. Looks a little bit like it wants to pull back, getting a little heavy up there. But generally, it's a lightweight sector. It's a little bit more defensive in terms of hard assets. People have their home values tied up, right? So I don't really think it's concerning. I just don't want to see it falling off of a cliff. I'd probably not be fond if this did something that looked like this underneath 42.70. I think you could overshoot this low by a bit, test out the daily 50, but as long as you're over 42.70, A-okay on real estate. Let's go on over to the XLP. Staples here, still stacking incremental daily higher lows. Not overly concerned. Don't love it. Don't hate it. Kind of neutral on this chart. It's not a risk-on group, so as long as it's not falling off of a cliff, I don't really have much to say about it. Let's jump on into our ratios. Here we go. If you're not familiar with ratio charts on Thinkorswim, check out the video tutorial in the top right-hand corner. We still see that narrowness over in the technology sector in terms of performance for the S&P. Your XLF needs a lot of work. Your XLC is really the new second heaviest weight sector. I shouldn't put a check mark there. It actually does not look good underneath the daily 50 SMA. I like how the XLY is starting to perk up here. Thank you, Amazon. Thank you, Tesla. If these two things could kind of carry a little bit more of the weight, if they could spread that out a little bit more from just the XLK, I would be a fan of that. In the bottom three that we know are the risk off groups, this looks fine, so I'll put a check mark. This looks fine. This looks fine. We don't really have a glaring risk off signal here, which I think is pretty self-evident in the actual charts and the way the market's trading intraday itself. This still looks great. This looks great. Of course, we know that we're using tech as a proxy for a lot of this stuff. Even the apples to apples comparison here, XLY, XLP, really nice reclaim of the 50 SMA. I actually think that this check mark is fairly important for the overall take here. ARK-K, Cathie Wood just cannot get the job done. I don't know what's up with that. If you're an innovation ETF and you're not at all-time highs in this raging bull tape, what are you innovating on? We'll let that be. The Russell 1000 growth and value ratio looks great over here. Looking for a higher low to continue the risk on look. Let's go to the B set and just kind of see what's going on over here. We've clearly got our gold ratio pointing straight up. That's bullish. There's no risk off sentiment there. TLT ratio going a little bit more so sideways as rates cool off. That's fine. Plenty of room for a higher low. Bitcoin continues to be an absolute dog. I mean, take a look at this thing firing off the red sailor shift tool. I don't know that I'd go out there and start shorting Bitcoin names. Maybe Coinbase breaking a trend line. We'll see it in just a second. But BTC just not really giving us the full-blown bat signal of, hey, everything's risk on, even the little funny Bitcoin. As we jump on over to the HYG, or not HYG, I do that every time these days. HG is copper. I love the pullbacks. I love the daily higher low opportunity. What I don't want to see happen here is a lower high firm up. I would be more concerned if the HG copper comes down into this equal low and starts to put the thread on. If that's the case, a little bit more concern, of course, with our Dr. Copper divergence telling us, hey, something's kind of up here, right? Data centers ripping to the top side, obviously a lot of copper required there, and yet the price of copper, demand, so to speak, not necessarily holding, right? A move lower there, something would be a little bit fishy. So we'll see what Dr. Copper has for us into the next little bit. Let's jump on into our dollar and interest rates. We know the dollar's been hanging out sideways as interest rates come in aggressively. To me, this is fine. The most important story is that as long as crude oil continues to move lower based on positive de-escalation over in the Middle East, let's go to the CL real quick. If I could type. There we go. We know this de-escalation is putting pressure to the downside on crude, which is easing inflation expectations, which is easing interest rates over here. The fact that we went from nearly 4.66s to now underneath 4.5% in a short period of time, really bullish for markets, and that's allowing that breadth to expand. I love that look for the market. We talked about it in the newsletter. We talked about it last Saturday. We even talked about it last Wednesday. Let's jump on over to the platform here and take a look at the Fed Watch tool. This is continuing to show us. Let me give this a refresh and just make sure that we're up to date. Okay, this something weird's going on with the Fed Fund futures here, and we've got the orange crayon from this morning left over. But we are still dealing with likely higher for longer and a little bit of a rate hike still priced in for that January of 27 timeframe. I'm still going to just say the argument. I don't think that a rate hike does anything to solve the Strait of Hormuz crisis, so I don't think the Fed is actively going to hike rates. I think they'll hold them higher for longer, but they're probably not hiking. If we look at the but rather economic calendar for tomorrow, we talked about in the intro how it's PCE, GDP, jobless claims, durable goods. That's really it. As much as I want to use the PCE as like a clickbait headline title, like, hey, pay attention to this, I don't think the market cares. We already have the CPI. We already have the PPI. I don't think the market cares here. They know it's going to come in probably hotter than expected. I think the market cares a little bit more about GDP, jobless claims. I mean, these have been coming in at record low levels. We've not, look at the taper here in the jobless claims, right? We're really healthy through the labor market. Durable goods orders might be somewhat compelling, but that's it. It's really all we're looking at for tomorrow's session and the end of the week for that matter. A lot of Fed speak in here, but I don't think it's enough to move the needle unless someone explicitly comes out and says, yeah, we're actually thinking about hiking rates. I don't know why they'd say that. They probably wouldn't now that Warsh is in there as Fed chair. Let's jump on into our earnings calendar here. Marvel after the close, Salesforce, Snowflake, the true standout, HPQ, Everpure. I mean, just a lot of stuff. Nuantix down at the lows. We do have tomorrow after the close. Dell, interested in that. MongoDB, a little bit. Costco, a little bit. Autodesk, a little bit more so. SentinelOne, NetApp, those capture my attention. So that's your calendar. Marvel, Salesforce, CRM, Snowflake, HPQ. Those will be the ones that we go look at in just a moment. Taking a peek. Let's just go there now, actually. Let's just quickly fire up a little bit of a split screen like this. Let's go with down the list. We had Marvel, a little bit volatile, but unchanged. This was another one of those exhaustion gaps headed into today's session. We opened higher another day and just faded off all morning. So it seems a bit exhausted. Seems like it needs to go a little bit more so sideways. Earnings don't seem to be doing too much for Marvel. We can go to CRM, which is lower on earnings. I've been a little bit vocal bear about some of the software stuff that's still living below the daily 200, just not really catching much of a bid. Snowflake, big green bar, massive uptake over here. Snow clearly still below the 200 as of the day's close, but with the gap up will be back above. So this is interesting. Is that going to be a gap that changes the entire dynamic of the chart? Perhaps. We also had S&PS. Synopsys as an earnings candidate, slightly lower on Synopsys. Let's go to a daily chart here. This would have been a nice double bottom or just large range breakout. Looks like that's on the back burner for now. And what was the other one over there? HPQ, P for Everpure, which used to be Pure Storage. So HPQ, what do we have here? A lot of volatility, a little bit higher it looks like. I love the daily chart here, a little bit of a bullish 3-bar play, bull flag on HPQ. P is for the old Pure Storage, lower on earnings there, no good. And then I believe we had Nuantix as well at the bottom. We do, NTNX. Nuantix, what are we doing? A little bit higher, a little bit higher. I hate the daily chart. Are we breaking out of a stage 1 base? Is this the start of a new uptrend? Maybe. You're still underneath the 200, though. That's the problem. That's the red flag. So we'll see where it lands as of tomorrow's open. But that's a quick look through your earnings winners and losers. But Snowflake, probably going to be a top focus based on the big old push in the upward direction happening here. SNOW, SNOW is the ticker on that. Let's get back into our supporting evidence categories now that we've covered the earnings names. Let's get on into our bond relationships, continuing to push lower here with rates moving lower. That just means inflation expectations are easing. Let's jump into our credit spreads, continuing to move lower here and here. That's bullish for risk appetite, no problems there. HYG in isolation breaking out. We talked about this on Saturday. Looks good, bullish data point. We are no longer as divergent. We're still divergent, but not as divergent in the HYG high yield junk. That is, of course, moving with the easing of interest rates. Let's jump on into total breadth. Let's go with some of these full screen panes. You can see new highs versus lows going positive. These moving average charts moving higher. That looks great. RSP technically breaking out of this V-shaped cup and handle. I mean, how can you stack that on your desk full of coffee? Probably not. But nonetheless, breaking higher here. New higher highs, room for higher lows, and continuation for something that looks like that. No problemo in the RSP. Equal weight S&P 500. QQQE equal weight NASDAQ 100 looks great as well. Something that looks like that, no problemo. You're in an uptrend. Just means that once again, breadth, the broadening out of the market rally is actually shaping up as we see interest rates come in. Let's jump on into our from breadth over to volatility. And just take a peek over at our VIX melting on today's session. We'll see if we get a complacency effect here in short order. We'll be watching out for that. VVIX also melting off over here. That is worth paying attention to. Let's jump on into our additional vol measures, such as the volatility futures. Very strong contango across the board. We had a VIXpiration the other week, and I'll tell you, already being up here close to a 2, very, very bullish in terms of the positioning of volatility in a nice contango here on the 9 versus 30 day, and the 1 day floored at the lows, very tight range. Overall, the picture is still bullish, risk on. I'm not seeing a huge ton of red flags. Let's jump on into the core list of companies. Let's see what's going on here, and then we'll send you on your way with 7 additional trade ideas after. I think NVIDIA is still worth watching. Ideally, the hammer off the 20 would have triggered on today's session. I do still think that this setup is in play for a daily higher low if we can break the previous day's high. NVIDIA was unable to close underneath the previous day's low. If we zoom in a little bit closer, you could see this. The close is technically back in range. So tomorrow, if we could do this and take out previous day's high, reclaim the daily 20, you might be thinking about a bullish available daily higher low, right? Think about this as a pretty solid proxy. You got a nice push, pull back into the 20, nice push. That was a pre-earnings run up. I don't know if it's going to be the exact same strength. Nice push, gentle pullback. I mean, it's very controlled. It's not like it was just an Armageddon sell-off, 3 bars and we're here, right? Very controlled, mild pullback, hammers, lower wicks telling us buyers stepping up. Are they going to rotate back into NVIDIA as they sell off some of the more, exuberant semiconductors? Maybe, right? So anything sort of over that 20 SMA on a reclaim could set us up for the move back towards the highs. If not, just a nice grinding move back to the top side. I think asking NVIDIA to just be a momentum player again might be a little bit much, more of a, quote, value, as crazy as it sounds, a value play in the semiconductor space, NVIDIA. So that's my look there. Let's go on over to our Apple chart. Looks like it might be ready for a pullback, noting that we failed the all-time high again today. I don't want to guarantee a pullback here. Obviously, there's no guarantees in the market, but your failed break here as the market then caught a bid into the end of the day looks a little fishy to me. So if this is going to take out that 308.50, I think you might have a short there on Apple tomorrow, and then I would absolutely try to pick it up long off of 303.25 if a setup presents itself for a daily higher low. Jumping on over to Microsoft, catching I believe a deal after hours, or the government contract was like a $9 billion deal or something like that. It's slightly higher in the after hours. You can see up here 413.90 by 414.50. So, I mean, it's not like we're gapping up into the stratosphere, but that is a bullish catalyst for sure. We'll see if we can reclaim the 412 level headed into tomorrow's session. I don't love this chart. I hate this little consolidation, but with a catalyst, it might make it at least a little bit more watchable. As you take a look here, one of the trade ideas might be something along the lines of, if we're opening here, look below and fail again, gets bid back up with the catalyst off of 412. That's an opportunity. If it just breaks through that on a positive catalyst, yeah, that's going to be a pretty gnarly move to the downside. If you can't get higher on a catalyst, that's probably a red flag. I would be willing to short that on Microsoft if it cannot get up off the floor here, as we've been saying. Amazon looks great. Absolutely phenomenal. Shout out to Jamie and the group who crushed this thing just right over this 269.50 level. Really nice. I mean, just a great Brigade bolt intraday. You've got your daily inverted head and shoulders up and over that high. Boom, right? There it is. So great looking Brigade bolt, hourly higher lows, just looking for continuation at this point. I don't know about smooth sailing into the all-time highs, but definitely some kind of flag action in here. You know, break of a trend line, break of a prior day high, Brigade bolt over this 273.50 level, then really seeking the all-time high target. If it's going to fail, right, a lower high in here probably has me a little bit weary of the stock, and then underneath the shoulders is where I would say the downside really comes in. This is a thin structure retracement underneath 262.25. So will require some time if it's going to be a short, unless you want to try to play it like this, risk reward to get there and then balloon the runners. That's fine. But my first base case would be, okay, Amazon's really put on a nice show here. Personally, I'm still a believer. I know it's been sort of quiet the last little bit, but still a believer that Amazon's a huge winner of the AI story, and that more highs are in store at some point. That's a longer term viewpoint though. Let's jump on into Google. A little bit of a concerning close here. Inverted hammer, unable to really accelerate over those highs and stick it. So I'm just paying attention to this 381. There's really two opportunities here. If the broad market's bearish tomorrow, if I'm completely wrong about that sideways consolidation to up, and let's say that PCE, GDP, durable goods, you know, the labor data comes out really poorly and the market's lower, fine. I'm not going to fight this on Google. I would be willing to try it short underneath 381 if the broad market's a raging bear tomorrow. If the broad market's bullish and we find ourselves testing that level, I want to be more open-minded to look below and fail. I want the bears to get trapped in here and then squeeze them straight back into this 400. That would be the more opportune look in my opinion. On the hourly chart, you could see here that you are starting an hourly trend reversal via these kind of like equal highs and slightly higher lows. So if we just consolidate here, I'm not going to write it off as dead, and I would possibly try to trade that over 392.75 into 400 if there's enough meat left on the bone for an intraday trade, then seeking continuation towards the highs. Jumping on over to Broadcom, there's nothing to do with this absolute pile of garbage. A lot of rumors floating around on this one. I'm not going to speculate on that, but I mean, what do we do with a chart that looks like this? If you've been having fun trading it intraday, you keep doing your thing, but I will pass on a trendless, volatile, violent, ugly, steaming hot pile of garbage that has horrible option spreads and does not offer a very tradable environment. Here's the metaverse. Awesome. Great break into the earnings gap above. I was not at the desk as that was happening, but take a look at this break. I mean, really hard to argue with that. Another revenue stream for Meta, adding a paid tier for users to the Meta One platforms. That's going to be, I believe, your Instagram, your Facebook, I suppose, Messenger app, some paid tier for the stuff. I don't, the market's going to reward that as another revenue stream if they're able to actually do something with it, kind of taking a page out of the X book, pay for X premium. So we'll see what happens and whether or not it ends up being a substantial stream of revenue for them. Nonetheless, the market seems to like that. Getting it up out of this range is the most important part. We've retaken the daily 20 and the 50. Any higher low Brigade bolts here look really great for a higher low, back to the equal high and then continuation. If we do just continue to lift here in the after hours, we're pulling back slightly, 631 by 631.87s. It's going to be right around in this neighborhood. So not the worst thing in the world, but any pullbacks in here, I think that's playable back to the upside, right? We have a multi-week consolidation here. If this is going to get in gear, I mean, it's probably not just going to be one day. So let's see if we could do it over 621.25 higher lows or Brigade bolt over prior day high, one or the other. Tesla, what's going on with the daily chart to start? It's been a little bit fickle. Had a nice short opportunity this morning. Caught a little piece of it. And as of right now, short to close this gap, right? So close the gap, hammering off the low. It's still just a loose chart. I thought it was playable because of the gap in the SpaceX merger catalyst this morning, but as of right, as of right now, I just don't see the active setup on Tesla. I mean, undeniably, it's higher in here, but where's the buying opportunity? Unless you literally bought the hammer high the very next day, first opening range, and you were smack on it long. I don't really see what you do with these bars in here in terms of daily setup. So, makes sense to be bullish. We are moving up off the lows. I just don't know what you do with it in terms of an intraday trade. I'd love to see it maybe set us up for some sort of sideways here and then higher out of some sort of a respectable flag. That's at least tradable at that point. But in here, just not much to really do with it, if I'm being honest. Let's go on over to JP Morgan. Really rough day, setting that lower high in here and rotating back down into the equal lows. The XLF still looks all right, but your JP Morgan just really, really rough. So at this point, a little bit more skeptical of financials because of this move. Any consolidation down here is bearish in my view, and you're just kind of asking for a break of these lows, 297.50s, to unlock the door for lower. If it is going to save the day and turn around, you got to get over 310.20. Doesn't look likely after a daily bar like this. So that's kind of a problem for financials. Financials haven't been the dominant theme in the market these days, so not overly concerned. Here's MU, exhaustion gap up from this morning. It did technically close over prior day's high, so I think you got a very easy over under. If this stays over Tuesday's high at 917.85, great. Buyers in control, squeeze out the shorts again. If it gets back down underneath, I would really we could honestly add another level here together. Let's just add a little level together. Let's do a little homework together. No problem. We'll throw it in there with gray dotted line. If we were to Brigade bolt underneath that, do you pull back through the thin structure? Probably. Right? That's just a break of a prior day's low failing the previous day high as well. So 2 days prior high. So your key level is 917.85, 891.25. Base case is probably something along these lines. If we could just consolidate in here, great, fine. Probably thinking squeeze if it looks like that. If we do just start to fail underneath the Tuesday high, this is your downside. Pull back to at least the top of the gap, thin structure retracement, reevaluate when we get there. Do we get some sort of a look below and fail on the gap and then higher? Is this a daily high or low? Yes. So watching for that on MU. AMD, another one that had a bit of an exhaustion gap up this morning, tried to get higher in the pre-market, just kind of failed back in. Honestly, this looks mostly like the QQQ, right? Kind of same look. So I wouldn't say much different, if I'm being honest. Sideways up here is fine. Consolidation and continuation, great. If we pull back a little bit more deeply, you could close the gaps at a daily high or low. That would be awesome. And then you're repairing the structure at the same time, then seeking higher. So on the hourly chart, something that is just like MU in here. Do I want to use that level anymore? Yeah, I'm going to stick with that. Just noting it represented bear flag that failed to go lower intraday. So in here, bullish consolidation over 494.25, overnight all-time high target. If we start to fail that, right, this is short-term hourly head and shoulders under the neckline. I would start thinking about the gap. I would ignore this kind of choppy structure from there. Not ignore as in it doesn't matter, but there's nothing to trade against in that. So underneath 481, I would just expect that low to play a role at 461.50. And that's where, once again, you get daily high or low after. Gap fill reversal, repair the structure, 20 SMA will be loosely in that area over time as well. Let's go on over to Intel, the new add to the core list of companies. Intel, nice hammering action, 2 back-to-back daily bars like that. Is the CPU story coming back to life tomorrow? This is a top watch up and over the 2-day hammer high. It's been bid from these lows 2 days in a row now, here and here. And for now, I just think this consolidation probably asks for the all-time high in Intel. It did not suffer the same fate as those exhaustion gap ups. So, is the high, all-time high, a reasonable target? I think so on Intel. All right, so looking good over here on INTC to finish up the core list of companies. Next up, we've got some trade ideas to share with you. The first set is going to be on Quantum. I was joking around today, like, oh, don't make me do it. Really? You're going to make me do it? It looks pretty good. I mean, that doesn't look half bad. Nice momentum push to the upside, a short squeeze, if you will, based on the quantum framework or awards that have been going out, the partnerships with the government. And you've got yourself just sort of like an inside-ish doji over the 200 SMA, gentle volume on the pullback relative to the up days over here. Is this just going to flag out and go? I mean, maybe. Like I said, are you really going to make me do it here on RGTI? Am I going to be a buyer of RGTI up and through this on a bull flag? I think quantums are the junkers, the crapcos of the world. But hey, I mean, if it's going to offer a trade on momentum, I'll be there for it. I'll say hello, goodbye very quickly and not overstay my welcome. A trade's a trade's a trade. It's not like we're holding this thing for 10 years expecting higher. But RGTI, QBTS is the other one that looks really good in here. Take a look at this, specifically looking at the lower wick of QBTS. Look below and fail the 2-day balance low over the range high from the hammer today. I mean, that's very, very plausible. I don't think this is a bad setup at all here on the QBTS. So we'll see what that hammer high does for us headed into tomorrow's session on the quantums. IONQ, if we just go on over here, not as good. I mean, better strength in terms of making a new high today, but it's not as set up, if you will. So I would stick with those others, RGTI, QBTS. JOBY. Let's take a look at JOBY. Why is this interesting? Excuse me. Well, you've got this really nice rounded base over here. You got yourself stacked higher lows. Same concept as QBTS. You've got yourself a look below and fail of previous day's low, moving into the overhead gap. And if we can close it, it's a tag up to the daily 200. We know that the space theme, this is obviously not quite space, but the space theme is extra hot right now with the SpaceX IPO chatter going on. So is JOBY going to catch a little bit of the bid on that? Maybe. ACHR is the counterpart that I've forgotten long about. It is underneath the IPO opening print still. So that's the big difference between these two. Look at Archer underneath 10. Look at JOBY over this 1061 by just a hair. This chart looks stronger to me on JOBY. Next up, BTDR. Let's take a look at this. This is one of those miners turned cloud companies. What I like about this is just what we have off to the left. This thin structure breakdown from earnings 3 cycles ago, I mean, that is just asking for a, back to the scene of the crime, right? So up there at the 23 spot, is it going to go there in like 2 sessions? It would be awesome if it did as a trade, but I don't think it has to. Nonetheless, you call this inverted head and shoulders, call this cup with handle, whatever you want to call this thing, looks really great right here on this 1510. If we could find some kind of an entry on this, not QBTS, but rather the BTDR, looking for the move higher through that thin structure. Really like what I'm seeing here on that chart. A little bit outside the wheelhouse at this price point. Same thing with the JOBY, RGTI and such, but hey, we got to be trading themes right now. It's a red hot market to be doing it. USAR, speaking of themes, the rare earths kind of took a back seat in here. I thought this was one of the stronger pullbacks across the group, right? If you look at an MP, for example, this got all tangled up at the moving averages. If you look at a UAMY, this got all hung up underneath the 20, the 50, the 200, starting to provide a little bit of support, but USAR seems like it's the best one set up. We've got an inside day today over this little pivot high. I mean, you could easily start thinking about that 32 from 2865, pretty nice move, right? So 32 as a target, inside day high breakout, something that looks like that. You could go look below and fail into the 20 SMA, get long for a daily higher low after this retracement, start thinking through the lens of a bull flag, and then in here, looks pretty darn good on USAR. Is that theme going to come back to life? I would watch the entire group. You could watch your CRML as well. This thing does not look as good. It's not as set up. You could say still an inside day, something that looks like that is fine, but watch the entire group. If you're going to be looking at that USAR trade, make sure it's the strongest one in the group. Make sure that the entire group isn't falling off of a cliff and it's just randomly hanging on. You don't want to be trading a weak group, even if the chart looks good. Let's go to Oracle up next. This is for data center, of course. Love the hammer. Love the possibility of a higher low over the 20 SMA, over the high, right into these highs. Let's rock and roll. IGV still looks great. It's a heavyweight component in that group. And of course, this stair-stepping action I love. I love the riding of the daily 20. I love the look below and fail of the previous 2-day lows. Love a lot of things about this chart. Love the light volume down here. Can we get a pop in the upward direction? I know the neo clouds are really stealing the limelight, but Oracle still has a constructive trend underneath it here. Only red flag is that it's not yet over the 200, but that could come very quickly. Let's move on over to BE, Bloom Energy. Take a look at this one, hammering off of the daily 20 SMA. Would love to see, a reclaim. What's going on with my screen there? There we go. Would love to see a reclaim of 300 as the entry, just holding the 20. So actually 2 ways to enter it. Either it sweeps the prior low, comes back above, we front run it, we get long in here, stop here, and target the high. This would be a re-add for me. I'm still holding Bloom Energy from, believe it or not, like way down here. So I would love to get more ads back into Bloom Energy if this is going to be a new weekly flag breakout, setting a higher low here for the possibility of upside. So that looks great on BE. Let's go on over to a couple of watches that I think are interesting, not necessarily set up though. App loving. What a day today, breaking in the upward direction on volume. See the green light up over here. You can see the reclaim of the daily 200 SMA. You can see us breaking out of this range. This is an even tighter balance range. I love it. All it needs to do is give us a pullback, offer a higher low and go. Maybe it continues. Maybe the first flag is up here. Not sure. Stage 1 base breaking into a stage 2 uptrend. Looks really good out of App Lovin' here. Let's go to CRWD, CrowdStrike. This one starting to pull back on the heels of that ZS disaster, breaking down over here for the cyber names. So CRWD, not immune completely, but not a bad looking bar still. It's a really algorithmic bid through here. It looks just silly on the hourly chart. Look at that. unbelievable. So I don't know where the higher low is going to be. It's not like we have a huge obvious structural point where it might be. Maybe the 614, 615 spot, but just looking and monitoring this CRWD, I mean, Fortinet, same thing. FTNT is definitely on that same list. Looking for the higher low pullback somewhere on that. Looking at Sentinel-1, right? These guys have earnings into the end of this week. A lot of these cyber names have earnings this week, so pay attention. But looking for these higher low opportunities, PANW is the last one on the lineup that I think also is watchable. Earnings next week on this one, a little bit more obvious of a pullback spot, some sort of a look below and fail on that roughly 235.70 area. 75 is what let's go 65.50, sure. Let's go 235.50 for round numbers sake. Some kind of a look below and fail in here. Does the daily catch up? Do we stay above ahead of earnings? Like, those are the questions I have. Again, these names, AppLovin, CrowdStrike, Fortinet, Sentinel, and Palo Alto, they're interesting, but they're not set up yet. The more interesting setups are actually Bloom Energy, Oracle, USAR, BitDeer, JOBY, QBTS, Rigetti in reverse order as we just discussed. All right. So that's what I've got for you in today's episode and installation of the midweek market update video. If you enjoyed it or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. As always, we'll be live tomorrow morning, as we're live every morning at 8 a.m. Eastern time for another episode of the pre-market prep. Come hang out. We'll get coffee and donuts for a Thursday morning session to cover PCE, GDP, jobless claims, as well as durable goods orders at 8:30. So we'll start at 8 o'clock as we always do. 8:30 is when the data comes out. We'll be on the S&P 500 futures by then, getting the job done with your pathing for the session to head into that day. So with that being said, have yourself a green rest of the trading week. And as always, I will see you in the next one.